Welcome back to the Ozbourne Foreman show, and this has been the biggest month so far for the channel. You guys came and followed my Twitter at Ozbourne Foreman, and we finally reached 100 followers. And also this was the week that we got monetized on YouTube. As per my strategy with dividends, all the money received from YouTube will be reinvested, which means it will either be reinvested into the portfolio or into increasing the quality of the channel. Thank you once more for all the support you've given me since creating the channel at the start of April. I cannot believe how fast everything has grown. Now YouTube is going to be my biggest priority going forward. I've got many plans, visions. Hopefully we can build this community to greater sizes than ever and really spread the word of getting people to understand their finances, start investing, and drop one of these for the YouTube algorithm. Also, the polls that I've been doing on a near weekly basis have really supported the channel, and I'd just like to add that since on the most recent poll, it seems that you guys would be interested if I started doing personal finance videos on the channel. So I'm going to really put some thought into it and see what I can do. But don't worry, I understand that all of you, or many of you right now, are subbed to me for my investment content for the UK. This is not going to change. It just means there's going to be less stocks to buy, which honestly I think is a better thing. If I really focus on a few stocks each month, it really means I can pour more information into it, sort of better stocks for the future. This also means there's some more variety in the content, and so that you don't have to see, oh, stocks to buy if this happens, stocks to buy if this happens, and they overlap in so many ways. I'm going to look more into things like credit cards, bank accounts, fintech reviews. But if you really don't like this idea, please reach out to me on Twitter or in the comment section, as this is a crucial time for planning the long-term visions of the channel, and all input is greatly appreciated. This week has been a mild correction in the markets, with the FTSE 100 dropping by minus 1.56%, the FTSE 250 dropping by minus 1.11%, and my portfolio subsequently underperforming the market, meaning I did worse, by minus 1.83%. However, this actually feels like I've dropped by a lot more, because the start of this week was actually quite strong, and things like Boohoo had reached quite high. And whilst it looks like, oh, but your portfolio total is higher than it was last week, therefore you should be up, this is not the case. I've actually deposited £500 this week, and therefore I'm actually down. But with this, I bought a bunch of shares at a better price. I've spoken about Boohoo far too much recently in the last month, so I'm going to quickly brief over this. Boohoo's founder, son, Umar Kumani, sorry about the pronunciation, he basically tweeted an image of the London Stock Exchange picture of Amigo Holdings. Amigo Holdings is the company you may have seen advertisements for. It's like Amigo Loans. Find a friend and you'll get guaranteed for a loan. Well, this was a bit dodgy. They had some issues during the pandemic, and subsequently their share price dropped something like 8p per share. He tweeted an image of this, which means that a lot of people believe that he was invested in this stock. And what this has led to is a lot of FOMO, and a lot of people have herd mentality thinking, well, if he's in it, I need to jump in this share, which has led to like quite a rally of Amigo Holdings. And I don't think this is sustainable. But what does this matter to Boohoo, right? It just seems like a pretty harmless but weird trading option that he's doing. Well, he's likely the future of the company. He's going to inherit a lot. I do understand that there's quite a few siblings, and therefore it might not be as direct as that, but it does give me more risks to add to the governance issues, which means that they're inappropriately managing the company. And whilst, yes, he's an excellent manager of Pretty Little Thing, and he knows how to make money, why is he wasting his time probably making side change using Amigo Holdings? Unless there's speculation in which Boohoo would acquire them, but it doesn't really make sense, because you would mainly be acquiring their loan book, which isn't going to be good, and Boohoo could already offer financing on their clothing. I just think it's a bit of a stupid move, to be honest, and I'm surprised there's not any laws or regulations in place that are going to prosecute him for it, and perhaps there is. So that's a little concern there. But if you have any different opinion on this, or perhaps some more insight, please drop a comment down below, and I'll be very interested to hear about it. Regardless, as I've said before, I don't mind what this stock does, and Boohoo in the last week has downtrended, but this is mainly because of general investor sentiment of the whole market. I don't mind if this trades sideways until September, or even for the next 2 years, but I know that in September they will release their full year results. I believe it will be quite promising. We couldn't simply justify trading at around 300p per share if things are good results. I bought some more Halma this week, or HLMA, which I averaged down my position by adding 2 more shares. It doesn't sound like a lot. This is one of my smaller positions in the portfolio to a total equity of £500. And if the total portfolio value stays the same, which realistically it wouldn't, the goal would be to have it at £1,150, meaning that it's very underweight at the moment, but it is a step in the correct direction. I've averaged down my price so that now the average price per share is 2,239 pence, and therefore I've got a more defensive hold that provides a reliable dividend income and growth, but also has growth potential. But the stock I bought the most of this week was actually Games Workshop. And obviously I'm very bullish on this stock, and it's the second biggest position in my portfolio. And they've been on a steady decline since their earnings report earlier a month ago. And basically this has meant that they're at quite an attractive valuation. Yes, I know they are a premium stock, and you'll see that the price to earnings ratio is ridiculously high, right? Well, yeah, but this is a premium I'm willing to pay for an excellent, well-managed company that I see great future potential with, similar to the case of Boohoo, in which Boohoo has something like a price to earnings ratio of like 60, I believe. But besides this, it got closer to my average share price for the shares, so I decided to buy more, and ultimately moved my average share price up slightly, which means yes, I'm only going to get less gains, but now I have more equity in the holding and I can benefit from it more. However, I did buy this after the ex-dividend date, which means for 5 of the shares I will not receive a dividend payment for the upcoming one in September. But it brings my average price per share to 8,253 pence and a total equity of £2,650. Great news for investors in Softcat. They have given a trading update and therefore confirmed that they are going to release their full year results on October 20th. They've basically said that the business has gone better than the board's expectations, which means that they're doing fairly well, I imagine. But I imagine the board's expectations could be quite conservative too. But during this time of uncertainty, it's probably quite a promising sign. And they've also said that the cash generation has been very strong during this time, and therefore they are going to be paying their interim dividend, which they cancelled in March, and also look towards providing the final dividend payment, which will be upcoming, and more details will be released in October. But this is great because not only are they paying an old dividend, but it also means that they're going to remain committed to paying their dividend. They've realised that yes, we've built the cash position, which was a defensive move made by the company, which I think was an excellent play, especially because at the time the pandemic looked awful. Now we're starting to realise that it's really not as bad as people think, and yes, cases are increasing, but the death rate is still decreasing, and that's probably just a larger amount of younger people getting infected that have lower mortality rates. And what they've said is basically, so long as there's no massive changes in the market, they're going to be providing this dividend and subsequently the final dividend payment. And personally, that's actually changing my investor sentiment with the company Softcat for better. Whilst yes, I'm bullish on the company, you could also notice that I didn't have too much equity in it. I mean, like, I didn't have that much money invested in Softcat, and it was still a small position because I prioritized other holdings. And I still will do for the next 2 to 3 weeks, as Ashted Group and Halma both have their results released on early September, and then Softcat is October 20th. So what I'm going to do is, if there's an opportunity, buy more into Ashted Group or Halma, and then after that I'm going to put as much as I can into Softcat. I know that the valuation of Softcat is now more expensive than it was a month ago. And yes, I'm buying it for about 10 to 15% more than what it would have costed at that time period. I'm not bothered about this because I'm going to be buying and holding long term. I'm not also chasing the dividend either, but it's there as an option. I just want to build my equity in this, but it also means that I'm not going to get it up to the desired amount I want in the portfolio, which would be 15%. But I might get it to around 5%, and at least then it will be quite a significant position in the portfolio, and then my portfolio will have decent amounts of equity in each compared to my relative net worth. Whilst yes, Boohoo takes up over 50% of the portfolio and subsequently my overall net worth, I'm hoping with time that will drop down and I can reinvest without selling Boohoo, reinvest all of my money into, well, not all of it, but most of my money into the other positions and then build them up. As for Ashted Group, their share prices remain pretty resilient despite the general market dropping, and they've managed to only lose 0.7%. There really wasn't enough volatility for me to average into this stock or buy more. However, I suspect that because it is 5% higher than my holding, it may be unlikely that I may never see a chance to average down, and I'm going to have this in mind. but I already have quite a substantial holding in it, and it nearly takes up the desired goal of what I want. So obviously in that case, Halma will have more of a priority, but I am still bullish on them and I will look to buy more if I can. Before talking about the biggest topic of the video, I'd like to answer some questions that I'd gotten regarding my controversial video on why I don't think you should invest in BP or Shell. FYI, I still don't believe in these two companies as investments, but I do understand why you may be invested in them yourselves. Some of you have pointed out the mistakes that I've made on my journey since creating the portfolio and the channel in April. And I feel that in this time period, I've made just as much mistakes as a beginner investor, if not more mistakes. This is hopefully to be more transparent about the investment journey that I've undergone so that beginners can watch through these portfolio updates or the show and therefore understand the mentality and therefore hopefully get ahead of where I was at that specific time. We've all made mistakes. I've visibly tried to show every single mistake I've made along my journey and detail each and every one precisely. You've asked before, why have I sold stocks that I was so bullish about before? And I think a prime example of this would have been my position in Redrow. This was a company that I was ramping or hyping up a lot. And I did not do this to fool you all into believing that Redrow is a better company than ever and it's fantastic above odds, but rather this is exactly my thoughts and opinions at that time of the portfolio update. It means that at that time, this is exactly what I felt about the company and that they were my true beliefs for the company and their future. However, times change and we all change. An example of this would be reading something you've written or created a few years ago and then looking at it today. You'll then start to realize, wow, I've actually changed quite a lot. And the views I had expressed these years ago are different to what I feel now. And this is because during this time, you've become wiser with age. With the portfolio updates, I've done extensive research outside of the channel. My chemistry teacher used to say, you need to do an hour a day of chemistry. Oh my God, I hated it and didn't do that. But for stocks, since I enjoy them, I'm happy to do 2 to 3 hours a day of research because I enjoy the process. And so whilst I still do 2 to 3 hours of stock research each and every day, and my method is now a lot more different and subsequently more efficient from this time span of 4 months. For example, I would simply search Google and go, best underrated UK stocks to buy now, and would look at their suggestions and then base my research off of it. So I would look at metrics I understood at that time, which would have been very limited. For instance, yes, I might understand return on shareholder equity, which is how well a company can make money based on the share pool, basically. Simpler metrics like just earnings per share growth, meaning how much earnings you will be gaining or growing from by holding a share. But it did used to be more of a random approach. I would just pick random named companies and then look into them. And then rather than researching specific niches that have long-term growth potential, whilst I've not really changed that much in this time span, I now only use the stock names to discover new opportunities. Perhaps it's the way the business is run, and then I will look for companies that provide this part, such as like disrupting companies that try to disrupt the market share or the balance of a certain niche and try to claw their way through, moving out and declining other market shares from other companies and making their way to be market leaders. I've managed to pick up much more terms and therefore greater understanding during my time of stock picking and creating investment content on YouTube. But this means that my mindset may be more volatile during this time, and I hope you bear with it, as it is all a learning process. But it would mean that I could create a video about a stock, and perhaps at the time I really like it, but then you may comment something or some new information that then takes place in my mind, and therefore I would then have a more informed decision, and perhaps I might change my beliefs in the company. And I think change is good. If you stick to companies just because you initially bought them and just stuck with it, you likely aren't going to do too well. You might get really lucky and outperform the market, but consistently long term that might not happen. Whereas if you accept, I made a mistake, and then change the idea and subsequently bring a better company into your holdings, then I feel that you would do better over the long term. But the main reason I feel that my actions may replicate a beginner investor is simply because I am a beginner investor. Whilst I've been invested in the stock market since around October, November of 2019, I've only started stock picking since April, which is exactly when I started the portfolio and the channel. This Ozbourne Foreman show has literally been everything I knew at every single week, and I poured all the information I had available in order to make the best decisions possible on what stocks to buy. I've not really had much outside influence, or I've not had years of experience, so I am therefore a beginner investor. And every video I've uploaded has shown my mindset slowly changing and adapting towards the market we're currently in as I become slightly more experienced each and every week. I personally know that I have a long way to go and that there's so much more to learn in this time period, and hope that we can build this community and all learn and grow together. And that's why I always welcome a discussion in the comment section. In the future, hopefully we can all look back at our pasts, not with regret, but rather the idea that we took action and started investing, that we appreciate the journey that we are taking. Each and every one of us is at a different stage in our own personal journeys. And for myself, I want to show each and every thought, belief I have along the way, so that we can all constantly adapt and improve our knowledge and hopefully beat the market. I just realized this sounds like a sales pitch to buy my online course. Whilst I haven't written one, and I won't even consider it until understanding the market so much that I can provide a unique aspect, I would like to ask that you'd consider subscribing, as it is free and doesn't cost a penny. Thank you. This week has been pretty big for dividends. I have gained a dividend income from National Grid of £8.96. I've since sold that position, but it is nice. And you know what? I did like National Grid for their dividend yield and income. This has been immediately reinvested, but there are also some other things relating to dividends. 3 of my stocks in the last 2 weeks have gone ex-dividend. This is London Stock Exchange Group, Games Workshop and Ashted Group. But in the next week, Halma are also going ex-dividend. So September may be my biggest month yet for dividends. Well, perhaps not in raw amount, but in terms of the amount I've gained relative to my now total yield, which is very low and around 0.65%, because Boohoo doesn't pay a dividend is so huge in my portfolio. I think the most important point to mention in this episode of the Ozbourne Foreman show isn't about my returns in the market, nor is it about important news relating to the stock market, nor is it a list of companies that I hold, but rather whether I feel that this channel is offering the right message to investors, you guys. And in fact, I don't own any of the stocks that I bought when I first started this portfolio. And it may look like I'm trying to hide my mistakes and therefore cover it up so you didn't realize that I did that. However, this is not the case. I really want to fully document with transparency my complete investment journey as a beginner. And therefore, my portfolio is a beginner portfolio. You would have seen those stocks at the start. Most of them, or all of them, have gone. And since July, I've kind of picked up a new strategy and I'm comfortable with this. And therefore, I'd sold the old ones because it didn't matter if I was making money or at a loss. I no longer believed in the future vision of the company. And I feel that if you're down like 20, 30% or any amount and you no longer believe in it, there's no point holding up until the market goes up, because you're missing out on opportunity cost, meaning that in that time period, you could have put the money to better use elsewhere. And in fact, that's what I've done. And since doing that, and since changing my strategy, I then began to start beating the markets, the FTSE 100 and the FTSE 250. I want to reassure you that if I sell one of my stocks, it's not because I'd been lying to you this whole time. It's because I'd become more informed and I'd learned more subsequently about that sector, or perhaps I'd found a better stock in the niche. And this is because I'd just subsequently done more research. At the time of each and every portfolio update, I'm pouring in as much knowledge as I have available in my head. But this means that if my visions change a lot, or perhaps my stocks will no longer align with them, and therefore I would be selling out and buying other stocks. So please don't expect this to be the most consistent, boring portfolio you ever see. And there's no guarantee that I will own all 6 of these stocks at all times, but rather I'm going to look at the market, see what risks are reflected in it. And currently I feel that that's Brexit. So what I have done is try to create a balance. I'm trying to balance my exposure to the FTSE 100 and the FTSE 250 at an equal amount, so that perhaps different outcomes of Brexit would mean one would gain, one wouldn't. So it just hedges itself and protects myself from potential downside. Then I've also got AIM for for that smaller cap exposure. So basically I have companies of all size in the UK market that could either benefit or just level out, giving me diversification in the market. And so I have an equal split, hopefully, in the future, with the FTSE 100 having London Stock Exchange Group, Ashtead Group, and Halma, with the FTSE 250 having Games Workshop and Softcat, and then AIM being Boohoo. Upcoming this week will be a stock analysis, a personal finance video, where I'm going to look at mistakes in the stock market. This is the Ozbourne Foreman Show. Thank you for watching. Have an excellent day.